What's going on, everybody? This is Black Men Sundays. I'm your host, Corey Sylvester Murray. We're talking about generational wealth, finance, business.
It's a black man Sunday. Time to put all childish things away. I refuse to be the man I was yesterday. Gotta put my best foot forward and elevate.
And today we're talking to Jennifer McNeil. This sister upgraded since the last time she's been on Black Men Sundays. We had this sister on when people were trying to buy homes and they were in the underwriting process. People were buying cars, they were buying jewelry, buying everything to get you denied. This sister here, when we had her on Black Men Sundays, this was last June, matter of fact. This was like the Father's Day Black Men Sunday show. And this sister told us the tips and the tricks of what to do when you're buying a home. So without further ado, Jennifer McNeil, aka Jay McNeil. She was an MTS last time, but now we call her Dr. J, Jei. So Dr. Jennifer McNeil, welcome to Black Men Sunday, sister. How you doing?
I'm doing well. Thank you so much for the warm welcome. I hope you're doing well too, Corey.
Oh no, I'm doing great. I mean, I couldn't do better. I'm still in the house that I own after 7 or 8 years. So I just want to jump right in. When we're talking about real estate, when we're talking about your expertise, because the last time I had you on the show, people didn't realize, people when they think of underwriting, you have the underwriter. It's kind of like a mob boss. You have the underwriter, but then you have the underwriter that watches the underwriter. Then you have the senior writer that watches the underwriter who's watching everybody making the moves. So just real quick, I know we took care of that on the last masterclass show, but the holidays coming up, people buying homes, people excited. Please, just from your underwriting background, what
Mhm.
should we do and what should we not do? We're buying a home. Should I go buy a bunch of furniture? Like, what should we not? Let's take care of that because I get that the most on Black Men Sunday.
So I'm very glad that you started out with that because that is definitely a major topic to set expectations about from the very onset of the mortgage process. Whether you're on the underwriting and operational side or if you are the actual loan originator, you want to be communicating the following right out of the gate in the mortgage process. So, to specifically answer your question, I've always advised my clients to make sure that they literally sit on their hands as it pertains to not buying anything during the process. And the reason, Corey, is because you run the risk of being able to compromise your ratios. And what I mean by that is your debt to income ratios. So at the point of application, we capture your ratios to be at a certain point in which you qualify. And then you go out there and have your credit run and acquire more debt or acquire more debt, and then that changes the debt to income ratio for your application. For some people that are already tight or maybe not so tight, it still can change your possibilities for qualifying for a mortgage at all, or it may change how much of a home you can qualify for. So even though it may not kill the deal completely, it may change your buying power of the home that you once thought you did qualify for, because now acquiring new debt may change the affordability that you have for the home that you were initially interested in.
We just getting started. I'm not even really asking you what I really want to talk about, but I want to jump in. It's about to be 2026. The holidays are upon us. I'm like, we're really in November already, but like in today's market, like what are the biggest misconceptions people have about building wealth when we're dealing with real estate, especially nowadays?
I would say mostly the biggest misconception that people have about buying real estate is the property itself. I think you must start out with a strategy. It's bigger than, oh, this is the neighborhood that I like, it's the home that I like. What I try to teach my clients is the development of a strategy. Before you ever even go tour a home, look at a home, let's develop a strategy. And I start that strategy off by, okay, what are the things that you're looking for in your next home in terms of not aesthetics, but how long do you intend to stay in the home? Is there an elderly parent that will be coming along? Do you have school age children? Are you here because you're a military family and this will be short term? So, things of that nature are things you're going to want to discover. And I call these my discovery questions that I ask my clients up front because that helps me to strategize with them as to what type of development they would want to look for, the price point, the types of neighborhoods that they would be thinking about ever before going to look at a home. Another thing that I help them to understand is cash flow. Um, you've heard sayings and philosophies around, well, it's cheaper to live in a home than rent. There's a yes and no to that. When we're talking about principal and interest, initially that looks like the case with raw numbers. But when you think about the maintenance of a home and with or without a warranty and all the other intricate details that comes with managing a property, maybe not so much is rent higher than having a mortgage. So, having that strategy in place, I think, empowers people to understand what they're getting into way before getting caught up in the aesthetics of a home. And I think when you lead people with a strategy more over aesthetics and the feeling and the emotionalism of having a home, I think you're doing them a greater service so that they have realistic expectations of what home ownership is really like. Because the next step then is to really teach them how owning a home is really a strategy in which to be able to gain wealth.
And let's talk about that a little bit, because how do you see this Black Men Sundays? We talk about generational wealth, finance,
Mhm.
business on here. So, how do you see the housing and lending landscape for Black entrepreneurs over the next few years?
I see it very promising. Definitely for entrepreneurs, there's all types of income programs that enable self-employed borrowers to be able to qualify for different programs so that they can be a part of the group of people that acquire home ownership, and not only home ownership for themselves, but I want to see more of us transition into the space of becoming investors. I mean, it's just, in my opinion, basic adulting that everyone is going to have a home for themselves. But I'm very excited, which I've allowed this to become my personal niche to work with investors because for the most part, especially as the kids say at this big age, we all have our own home or have had our own home or are relocating or whatever the case may be. But I specifically am growing more and more excited to see people that look like you and me, and of course, everyone move into the investor space, bigger than just, some people feel like, well, I've acquired my own home, and then they get to a resting space. Well, I've achieved home ownership, and they tend to relax and think that that box is checked and, we're all settled now. And as I mentioned a little earlier with the other question, I mentioned a term, cash flow. And that's what being an investor will enable one to be able to do is have a monthly income source that's ongoing that will allow you to be able to have the cash flow as if there is another business. Because even when it comes down to filing your taxes, it's called a Schedule E on your taxes, and that's how underwriters look at it. It will be deemed as a rental income. And so I want to encourage people to, even if you currently own a home, there's another level to this. Become an investor.
Great information. And we're going to get to that in a minute. I just want to, take advantage of your dual expertises, because you have so
Yeah.
many of them. So, I mean, you're a mortgage broker, you're a realtor. So, how does the dual expertise help your clients to have better outcomes versus if you just only had one specialty?
Corey, that actually is one of the reasons why I specifically, again, going back to the word strategy, why I specifically wanted to strategize a move of living in Florida. Florida is one of the few states in the US that allows for one who is a mortgage broker and a realtor to perform both of those fiduciary responsibilities in one transaction for the benefit of the client. So, how does that benefit the parties involved? What that looks like is that, say you're my client, and the first stop, many people don't know this, but you should, when you're shopping for a home, you don't find the home first. That should not be the first thing you should do. What you should do is get pre-qualified for a mortgage first, because there's nothing that's going to break your heart more than to find a home, fall in love with it, and it may not be the home that you actually qualify for. So, to just save yourself all the emotions that go along with that, you want to start out with a mortgage lender and get pre-qualified. They will give you what is called a pre-qualification letter that has all the terms around what type of loan, what loan amount that you qualify for. Then you will take that pre-qualification letter by way of in print or email it to your realtor. Well, in such case, if you're working with me, there's nothing to deliver to another party because I'm considered the one stop shop once I produce the proof qualification letter. And there's nobody else to convey information to because I, as the lender, already know the information around the lending aspect of it. So it cuts down on having to convey information to two parties. And that's one of the biggest things that the consumer, the realtor, and the lending officer all say about each of the professions. Well, the realtor's not calling me back, or the mortgage lender's not calling me back. So, all the mix ups that happen between the lender and the realtor, and even the borrower or client, that's all condensed because you've got one person that's handling both sides of transactions. So that makes the process even more seamless because the realtor, i.e., lending professional, has all of the information and they can just transcribe all of that information in one transaction. There's no other additional person to get to know. There's no other additional person to get to trust. There's no other additional person to communicate with. It's just seamless for all parties involved. So that's the true benefit.
Yeah, because I'm sitting here like you got the whole game. Because last time we had you on Black Men Sundays, I was telling you, before we got in our house,
Yeah.
I'm at work. The underwriters calling my wife, "Hey, we have an emergency, like right now. I need this document right now." I'm like, "Whoa, I'm on a shoot. Like, what are we talking about?" I'm thinking somebody, something's wrong. And they're like, "No, we need to get this document to them right now." So, and you touched on a topic. You talked about real estate investing. So these days, people that are looking to start or scale in real estate, what
Yeah.
tips or advice do you have for those brothers and sisters out here listening?
So, for some people, um, it's scary because you're like, oh, especially if you've never done it before, and you're just, used to having managed the dwelling place that you have of your own. But just think of it, start out as with anything, just doing it with baby steps. Maybe you can start out with a condo or a townhouse or something of that sort. Corey, the luxury that you and I have living in the metropolitan of Orlando is that a lot of the guesswork is already done for people that live where we do or areas that are comparable to ours. People are coming here all the time. We live in a very transient city where, and then, with Florida having very much warm temperatures for 9 months out of the year. We are a retreat for most people around the United States and sometimes even the world because of all the attractions that we have here. So, with that being said, lots of investors and lots of investor projects are developing here because of that. So, this is a luxury specifically for this area where you find so many people that are willing to come to this specific area and figure out, hey, where is an area in the metropolitan that's underdeveloped, where can I get in? And so I'm encouraging people to check out specific areas like St. Cloud that may not necessarily be within the city limits, but it's close enough to the metropolitan to where it's still desirable without the busyness of places like or Interstate I-4 and things of that nature. So those are some of the areas that I would highlight. And so what you would do is to simply get involved in that. It's very much like the residential process. You start out with a loan officer, get pre-qualified, and the difference between getting pre-qualified for residential versus investor is that you're going to be required to have a little bit more skin in the game. And so let's talk about and unpack why that is the case. So the underwriting theory for that is you are going to more than likely take care of the roof that's over your own head before you take care of the roof that's over someone else's head. So the probability of you paying your own mortgage is going to be more or greater than you paying the mortgage on your investment property because you, although you may own that investment property, you don't actually live there. So if that be the case, then underwriting is structured and the guidelines are structured around that you need to have more skin in the game, and that means more of a down payment is required because of that, because it's a greater risk being that it's an investment property versus it being a place where you actually live in. So in just some generic scenarios, whereas you might qualify for 3.5% with FHA, if you were doing an investment property, the requirement could be 10% down. So just know that as far as EMD or earnest money deposit, the requirement would be greater to get started in the investment space. But all other elements would be pretty much standard. And then another part of the qualification process for investment properties is that if this is a property that you are going to hold on to for, I don't know, maybe like if you want to do Airbnb and things of that nature, that will be deemed as rental income, and they'll count that up front during the process because you've already told underwriting these are your intentions for the property. So even if it's not leased at the moment in which you're doing the application, communicating the purpose or the use of the property when you make those intentions made at the point of application, they will factor in those new rents or those anticipated rents that are to come as a result of you acquiring the property.
Let's just clarify something, 'cause I feel like people listening are just listening. They've heard you on the show before, but I'm just clarifying. So we're basically getting the best of the best. We're getting the realtor flavor. We're getting the senior underwriting game. Keep in mind, senior underwriting. That means the underwriters work under
Boss is
her.
boss.
There
Yes.
we go. I just don't want that to go over nobody's head because people don't see us out here doing that. And
Yeah.
real quick, let's just rewind. Let's just take it way back real quick. Because one thing that I'm learning, and when I had you on the show last, it actually went over. Oh, it actually went over my head, but I realized like when people are starting their entrepreneur journeys, whether people are successful doing X, Y, Z, one thing that I hear is faith. I hear faith. I hear saying yes to God. So let's talk about how like your purpose. and how
Mhm.
having faith, because I remember the last time we had you on, you were talking about, faith, and I think you were eating like a you were drinking like a plant-based drink and all that. So
Cliches,
let's
yeah,
talk
yeah.
about, yeah, yeah, exactly. I remember you.
It's
So
so
let's talk
funny you
about,
remember that.
oh yeah, for sure. I mean, it's Black Men Sundays. So
Yeah.
let's talk about like your purpose and your boundaries and how like your faith has shaped you to become the woman that you are today.
Sure. So just to begin with, my book was birthed out of a place of pain, but it became a part of my purpose. So it was all essential, it was all necessary, and I wanted to show my readers what it means to be able to lead yourself. And I would like to say that that is the gist of my overall message, what it's like to learn to be able to lead yourself. And through boundaries and healing and alignment, or maybe even realignment with God, um, I discovered, and I was on a path of discovery to learn that leadership isn't just about having influence over others so much as it is about character and character development, clarity, and just having courage. So the message of my book, and which encapsulates my whole transition, is to master self, leadership, and discipline, and everything. Once you've done that, will align. Whether that's your business, your relationships, and your overall peace, just as a person.
With Black Men Sundays, one thing that outside of brothers and sisters having books, faith is like their biggest motivator. I've had brothers on the show come on and say how they were going through it, and but then they finally figured their niche out. So,
Yes.
when we're talking about you, I mean, you're very multifaceted. I mean, real estate, mortgage broker, PhD. We're gonna get to the PhD in a minute. I know you're ready to really lock in on that. I'm just kind of
Yeah.
holding it back. I'm like holding it real quick because the brother's gonna want to engage with you as well. But when we're talking about the diversity of your business, what
Mhm.
benefits does your diversity have, and how are you able to help clients from your business perspective?
I'm so glad you asked that question. And just to give a little bit of clarification, my doctoral studies have it's actual doctorate of ministry. That's the degree, and my cognate is leadership. And so, how that's helped me is my approach. Even though mortgage and real estate are essentially sales positions, it helps me to be more of a consultant than be so much of a salesy person. And because I have the background for ministry, which because that's what the degree is, a doctorate of ministry. Prior to that, my master's was in theological studies with the Christian counseling as my track. So it piggybacks off of that same discipline. So when a person is working with me, I'm coming from a place where I'm literally, as I mentioned before, asking discovery questions, just trying to find out where they are, where do you want to be, how do we strategize a roadmap in which to get you to where it is that you want to be, and let's consult on how to get you there and building that strategy. And so for most people, that disarms them. They feel like it's a consultative approach. They feel as if their hand is being held in the process. And it's a lot less pressure for all parties involved because I've been blessed in such a way that, and I don't say this with any other spirit other than it's just the truth that, God has allowed me to prevail in such a way where I'm not under any pressure to pay a mortgage or anything of that nature because I don't have any debt. So I'm literally living and trying to give people a strategy that has already worked for me. And that's why it's so much of a gift because it's not a pressure that I'm, motivated by any exterior forces that I have of my own in order to do, be, and have and get. I'm not motivated by any of those factors in which to be able to get this message, this strategy to people. I literally can pastor them through this process of home ownership, of developing their own strategies to become an investor or the like. And so when we get back to faith, um, there's no way that you can be an entrepreneur and not know God in some capacity, because there are times when you can have a closing and then there may be months. And so in that faith walk, you're forced to become a good steward, because you may have a heck of a month and there's an abundance at that month, but then you're taught to be a good steward, to put things aside and put things back, because you don't know when your next paycheck is coming, and you have the ebbs and flows of business. Rates affect your income, the economy affects your income, holiday season affects your income. There's so many different factors that can get in the way or influence your income. And so you become more reliant upon God and your faith through transitions, because there's so many things that are unknown and unseen and you don't know how to prepare for it. And so you're building this track record as well as a relationship with God to call to your own remembrance the last battle that you had with him, and you're remembering what he's done the last time in order to propel for the next opportunity, to look at things a little differently, because you're able to recall the last time he's seen you through. So definitely being an entrepreneur is going to challenge you in your faith walk. It will not be easy, I can assure you, but it will definitely be worth it for sure.
I think I'm gonna need you to say that again because wow, that was wow. And on this show we talk about uplifting, and one
Mhm.
thing that we've seen over the last probably really I want to say like the last 3 years we've been doing Black Men Sundays. My brother Kalali, his wife went and she got her master's degree. A lot of sisters are really taking leadership. They're getting degrees, and I've had brothers from LinkedIn that actually get a paycheck from LinkedIn. They ain't just on LinkedIn chilling. They paid stub say LinkedIn on it, and they said the one thing that women do that men don't do is networking, as far as asking the right questions to get the skin in the game, to get the pay that you're owed. And that's what I want to talk to you about. You have a PhD. I mean, Dr. J, Dr. Jennifer, but you go by J. So when we're talking about as far as you getting a PhD, because a lot of like I said, I feel like men, especially black men, are behind black women as far as getting masters, getting PhDs. So when we're talking about like your doctoral coursework, how is
Mhm.
that aiding your business?
Mhm. So again, I'll say it's not a PhD, Corey. It's a doctorate of ministry. It's described differently than a PhD. It's a doctorate of ministry. And some of the coursework that I've done, because my cognate is leadership, how it aids me is, Corey, oh my gosh, it is really fine tuned um, how I see leadership. There is not an organization, there is not a business, there is not any corporation, um, even in your own personal home. Every institution has leadership or should have leadership. And so, with having furthered my studies in leadership and earning the doctorate of ministry, it has allowed me to be able to evaluate and recognize the gaps in leadership. It has enabled me to recognize how to develop a leadership pipeline. It's given me the tools to be able to develop theories and surveys on how people that are in the workforce, how they see their current conditions, how they feel it can be improved, and getting the feedback to leadership so that they can use that as a resource in which to be able to um, modify process improvement and change, and also offer executive coaching to leadership. Because just because you've performed well at a job function does not mean that that equates to leadership skills. So, all the gaps of everything like that and in between, this has enabled me to be able to recognize the spaces that need a little bit more delving into, and how I can bring those things closer together for all parties that are involved.
All right, fellas, the stage is open. Black Men Sundays. We have Dr. J. McNeil on here giving us some gems. And so on the back end, Dr. J, you know how we get down on Black Men Sundays. My brother's going to talk to you first. We all looking a little thick right now. It's a little cool outside, so we apologize. Go ahead.
Man, you talking about me? I'm looking thick. Y'all got short sleeves on and t-shirts and but y'all in Florida, so y'all can do that. I told y'all I'm out here in Maryland. I gotta stay warm. But
Layers.
doc, what's that?
I said layers.
Exactly. So, Dr. Jennifer, this is Kalali Dope. As I just said, I'm in Maryland. I'm not with these guys in Florida. But
We won't hold that against you.
don't hold it against. I wish I was down there. I wish I was enjoying the warm weather with y'all, but I'm not.
Yeah.
But yeah. First and foremost, definitely appreciate you taking some time out with us to talk with us on the show.
Of
Um,
course.
the first question I have for you is, so it's pertaining to the real estate market. Now, you've been talking about encouraging folks to become not only homeowners but also investors. I
Yes.
had seen some reports not too long ago about the actual supply of housing in the housing industry, that it's not really it's not really as high as it has been in the past.
Right.
Are you aware of those reports? And how does it impacting your work in terms of, in terms of different things? Is this a buyer's market versus a seller's market? And for people who are interested in jumping into either home ownership or real estate investment, what are some things they need to be aware of?
So, if I heard you correctly, it sounds like what you're describing is inventory being
Mm-hmm.
somewhat lower than what we've seen it be in the past. And
Mm-hmm.
part of that reason has to do with, so let's just go back maybe 2007, 2008. That was a time in which people at that time they were acquiring rates maybe in the 3.5 percentile. So let's see, if that were you or I probably wouldn't be willing to list my home for sale if I had an interest rate that low, because interest rates currently are not anywhere near that. I mean, at best, maybe 5, 6%. So when we talk about inventory, that's probably the primary reason as to why we're not seeing as much inventory on the market. Now, that speaks for existing properties, because why would I take myself out of having an existing rate of 3, 4 percentile to move out of the current home and then get into a home where the interest rate is higher? It just doesn't make economical sense to increase my mortgage payment and then possibly the purchase price of the home, because as you know, inventory, is going up in the sales price too. So the sales price, the interest rate would be higher, probably not going to list. So that speaks to that. Now, what's helped to offset that, if people are considering new construction, the thing about working with new construction is lots of times the builder has their own mortgage company. So they can get a little bit more creative with interest rates because, they're in business together. So here recently, I've seen some new construction for as low as 3.99%. And that's like really unheard of. And so I stopped in to see, okay, is this just for locked in for 2 to 5 years? And they're like, no, this is a 30-year mortgage. So if a person is wanting to get as close as possible as they can to interest rates that we saw back in 2007 and 2008, the strategy that I would like to offer to you is to consider new construction. That may be one way to offset that. Now, you spoke to investing. Tell me, what was your question specifically about that again?
Just for people who are looking to get into real estate investment, um, what I guess what are some things we should be aware of vis-a-vis like uh housing supply, interest rates, that kind of thing.
Yeah, so very good point, and I'm glad you asked that. There used to be a turn time of properties being built of about 4 months because of supplies and things of that nature. Now, build out time has increased to about 6 to 8 months. So that's been going on, quite frankly, since COVID. And then we got relief from it, and then things kind of slowed down a bit, even with that. So that kind of affects inventory too, because we're not producing as fast as we have in the past, whether that's properties that you're going to occupy as the owner or investment. So that has an impact on investing, as well as residential properties as well too. But as with anything, just because there are some hiccups that people are experiencing for whatever the reasons are, I would encourage people to not let that be a deterrent. Just ride with the ebbs and flows, because at the end of the day, the building process and all the hiccups that we're experiencing, they're not going to last forever. Just get through this little time, that we're experiencing, because the greater goal is to create another income source and scale your new real estate business. Because at that point, once you've acquired a couple of properties, then you're deemed as a real estate investor, because that's literally what you're doing. Once you have a couple of properties that you're collecting rent on, you're not just an employee at your job anymore. The fact that you have cash flow coming in, you have a
Mm.
schedule. On your taxes, then you're now deemed as a real estate investor just because of that cash flow that you have now.
Real estate investment is something I've been looking at for a while. I haven't done anything with it yet, but hopefully in the future I'll be trying to jump into some real estate investment. So I definitely appreciate
Absolutely. Love to help
if
you
I
with that.
oh, that's what's up. Yeah, you know I'll keep you.
Um,
So I'll look you up on LinkedIn. I'll look for
yeah.
my connect. I'll keep you in the
Okay.
Rolodex for sure. For sure,
For
for sure.
sure.
If I can ask you another question,
Yeah.
you started your career, and it seems like you've done and have your hands in a bunch of different things, which I think is great.
Mhm.
What was like? Did you have a plan for all of these things you were gonna do? Like, was this your ultimate goal, or what was your journey for you to get from where you were to where you are now?
Yeah. So I'm so glad you asked that question, because the shortest answer is no. I didn't necessarily have a plan. Like, okay, I want to go after mortgage, then real estate. No, that wasn't the case at all. My journey has more so always been about alignment than it's been about hustle. Even though it might appear that way. And I just think it's because we live in a society that, if we appear to be busy and doing a whole bunch of things, then we're about our hustle. But uh, truthfully, my journey has always been about alignment with what I'm supposed to do in the earth, which goes
Okay.
back to my faith walk. I literally started in the industry and was kind of led here I started out by taking a contract position while I was still a college student, and this kind of dates myself, but oh well. I took a contract position with a bank called, back then it was called First Union,
Oh, I
and it
remember
was in
that.
the, yeah, it was in the legal department in Charlotte, North Carolina, while I
Oh,
was
okay.
still in college. And we now know that First Union became Wachovia, and then Wachovia became Wells Fargo. So my general banking and mortgage experience goes all the way back to then.
Wow.
And all I ever wanted to do was kind of show families what I had done. Um, I, through inheritance, acquired my first home by way of my grandfather. He passed away, God rest his soul, like when I was 9 years old. But the first home that I had bought, I was 23 years old. So that's, like literally I graduated college when I was 22, homeowner
Wow.
by 23. And so all I had an interest in doing was like, wow, I was able to do this at 22. I want to show other people how to do this because,
Yeah.
hey, I'm young and I did it. You guys can do it too. So that was my pure motivation, just to be able to teach others how to build wealth. And that certainly if I could do it and I was young, everyone else could do it too. And that it wasn't just a transaction. But as I grew, I realized that just having access to a property without being equipped with the financial literacy just wasn't enough. And
Mm.
so I also wanted to be able to create generational wealth. So by that time, I was completing my master's and my concentration was in counseling. And I went to go visit with a career coach who happened to be a Christian counselor as well. And I'm like, I got this financial background, but I'm in school for this, for ministry. Like, how do I marry these two disciplines? And he was like, Jennifer, I mean, don't you know that that's like the number one reason why marriages fail and why, couples are in a disagreement? You can do financial counseling. And so for me, because I had a knack for, I'm the person that loves touring homes, and Charlotte had a festival called Homearama, and it was a tour of homes. They would be new developments of new construction homes, and you would go around and you tour all these new homes, and you would just be floored by the beautiful construction and the fixtures and all the trimmings that the home had. And so I was like, wow, if I could encapsulate something about real estate with finance, that would be a good hybrid of the disciplines that I love. And so that's how it was born for me. Just two things that I loved, financial literacy and then real estate, and voila, it just literally kind of fell into my lap. I went from general banking right into mortgage banking, because in most cases, if you work for a bank, they have both departments within the same company. So I just simply transitioned from running a branch into the mortgage division.
Okay, that's really cool. That's really cool. I like the idea of alignment. Everybody
Yeah.
always talk about hustle, but have we really thought about
Alignment.
what really aligns with, our desires and also our purpose and, what our
Yeah.
talents really are. So I really love that idea of alignment. That's really
Yeah.
cool. I got one last question for you. Then I'm gonna let you go. I'm gonna let Ray or somebody else ask you some questions. So you run a business in is it like entrepreneurial leadership or organizational leadership? Is that
Yes. So the services that I offer through Maven Leadership Solutions is executive coaching, and is also speaking. There are sessions that I provide for executive leadership, by way of incorporations and educational institutions as well. And I really get in the trenches with executive leaders and find out what literally keeps them up at night. And I work with them and their teams and being able to find out what the gaps are, as it may be things like communication, like what's not being conveyed well between leadership and those that they support, and vice versa. And also teaching leadership, how and what it looks like to get in the trenches with the people that support them, and also express to leadership things like servanthood leadership. Some people have the ideology that leadership is dictator, do what I say because I said it. And I coach from a framework of leadership looks like lacing up your boots, getting in the trenches. I was sharing earlier today, there's a book called And They Smell Like Sheep. And it's a
Mm,
book that I read. I don't know if you're familiar with it. When I was in seminary the first time working on my master's. And it's a book that talks about how if you're going to be a servant leader, unless you smell like the sheep, you're not being an effective leader. And it just really means that if you're going to smell like sheep, or that's the end result, to smell like sheep because you've been amongst those that you have led. And the benefit of doing that is you gain their trust because you're among them, instead of being a dictator, instead of being untouchable. They know that they have a leader that works alongside of them. And typically, how that conveys to people that we lead is when they know that you will get in the trenches with them. Not only do they trust you, but there's nothing that they won't do for their leaders that they see that is involved in the same cause with them. And so I like to coach leaders from that framework to help them to understand that it's a give and take, and leaders need to see the people that they are leading as people that they've been entrusted with to lead. There needs to be a spirit of humility. Even though you're a leader, there needs to be a spirit of humility as to how you see those that you've been entrusted with to lead. And so
mm.
those are the things that I like to demonstrate within our coaching.
So would you say that that's the biggest challenge that leaders have is to express that humility, or what is the biggest challenge, or I guess most common challenge you've seen as far as leadership coaching?
So it can work on both ends. Sometimes leaders can only be as good as the resources that they have. So sometimes, especially in leadership, they can only be as resourceful as to what their leadership or the founders or the CEOs are offering them. Sometimes their hands are tied with what they're able to offer to those that they support. But even in those cases, I think showing up with qualities such as humility, such as empathy, and just being a listening ear, like being available, those are all character traits that really go far, even if resources are limited. So I think just remembering to be a real person for those people that you lead really are things that communicate very well to people that you're leading, in such a way that they don't feel just like an employee. They really feel like they have an advocate in their leadership.
Awesome, awesome. Appreciate you. Thank you so much for your time today, Dr.
You
Jennifer.
are welcome.
So I'm Ray Simmons calling out of Rockledge, Florida, and
Okay.
I'm going to first of all thank you for coming on the show. Like I've been just taking notes the entire
Thank you for
time you've
having
been
me.
talking, trying to keep up. My pen is smoking over here. But before I jump into my first question, I wanted to piggyback on what you when you were talking about, or when the last question was about investing in real estate.
Mhm.
I was going to say that another option, or at least exposure to that, is also in the markets, like buying real estate REITs,
Yes.
real estate ETF funds. That'll
Hmm.
give you some exposure also if you haven't bought like your first property yet. But I just
Right.
wanted to throw that out there. And I, in regarding rates, I don't know if, I mean, we refinanced a few years ago when the rates dropped, and I don't know if we'll ever see like a 2 point anything again. You
Exactly.
know what I mean?
Ex-
Unless there's some type of black swan event or market crash, or there has going to have to be
Mhm.
something to provoke that. But
Mhm.
segueing into my first question, um, when it comes to lending with your company, so the Fed, they're about to cut rates
Mhm.
really soon. I don't think they have a
Mhm.
choice at this point, but
Right.
they're going to start cutting rates really soon. um, Turn on the money printers, quantitative easing, right? They're going to turn the money printers
Mhm.
back on, and that does affect rates. It affects inflation also, but it definitely affects rates as well. So
Mhm.
how or what are you guys? How is this going to impact how you guys loan, or your practices or whatnot? If that makes sense, like because I know it's going to
Yes.
change, with the interest rates changing, but I guess what options, I guess, are you guys offering while this is going on in the market, if that makes sense?
Right. Very good question. And if we look at mortgage um, over history, we'll be able to denote that this is very cyclical. Even in
Mhm,
times past. So I agree with you. There is going to be a boom. I'm predicting it will be first, second quarter of next year because, like you said, it's kind of we have to. It's a way to re-stimulate the housing economy, get things going again because enough has been enough, quite frankly.
mhm,
And so one of the ways in which you do that, everyone knows you have to lower the interest rates in order to stimulate things a little bit. So what's that going to look like? How do we prepare for that? What it will look like for some, it'll be a big of a influx of refinancing. For some people, they will feel the need to refinance, even though maybe their interest rates may not be low, like 3%, like we've seen them before. Remember, that's not the only reason why people refinance. Some people refinance because they need to do major home improvements because, quite frankly, they're not going to be able to leave their home. They are going to have to make the best of it in the home that they're in. And they may not have the cash that is necessary in which to be able to make those home improvements that they need
mhm,
in order to deem the home livable or someplace that's comfortable for them, or say there's an elderly parent and they need to outfit a room so that if the elderly parent or someone that's handicapped, it could be more accommodating and they have to stay. So they may refinance to be able to have the capital in which to be able to do so, to add on additional bedroom, bath, or square footage. And they just simply have to utilize the
mhm,
equity that's in the home in order for it even to be possible. So that may be someone that has to refinance. Someone may use the opportunity to refinance to consolidate some debt. Now, granted, they may have a credit card that is 25% interest rate on it. Well, just simple math, we know that an interest rate on a mortgage is always going to be less than, for most people, I will say, is going to be less than what your credit card interest rate is. So some people may utilize the refinance product in which to be able to consolidate debt. So, and you still have people doing that, that they've gotten behind on credit cards and they're just way over their heads in that. So they'll utilize the equity in their home to clear out those balances and make them zero. Because you can't write off the interest on credit card debt. But, with your home, there are other options. And of course, I have to preface that by saying I am not a tax advisor. So check with your tax advisor for that, whichever state that you live in. But those are some options in which you can explore. So we'll see some refinance transactions start to escalate. As far as purchase business, of course, we'll continue to see that because for many of us, that's what people are waiting on. They're waiting on the interest rates to decrease. Like we talked about in the earlier question, why there's not a lot of inventory. Well, there's not a lot of inventory because people are not finding interest rates that they find favorable, so they're remaining and retaining their own homes. We may see as a result of interest rates decreasing, either people listing their existing homes, moving to a new home and selling their existing home, but we're also going to see them move to a new home and retain their existing home because now they become a new homeowner in the new property with a decent interest rate and an investor at the same time because they're retaining their existing property. So I'm excited about the future of real estate, and I do feel like we're going to see a lot of people become investors now because of that, because they're just not going to sit well with the idea of letting their current interest rate that they have go, and it doesn't change the taste in their mouth that they have to desire a new home. We're going to see more people acquire a new home but still retain their existing home.
Excellent, excellent. Yeah, you're right. It is. It's true. It is one big cycle, like you were saying, and
Mhm.
we have, that's what we did. I think we had a 3.75 rate at one point, and a few years ago when the rates dropped. We
Mhm.
refinanced for the 2.75, which we
Right.
didn't have to do it, but why not, right?
Right.
Why?
Why not?
That's, money going to something else. So,
Yeah.
so that part is, so from an investor standpoint, anytime we talk about like, turning the money printers on, as an investor, I get excited because I know what that means for the market and how it impacts the
Right.
market as an investor.
Yeah.
Um, there is a downside to it at certain point because dropping rates like that does raise inflation, which
Mhm.
in turn, if you're a W-2 worker, a
Yeah.
9 to 5 worker, it gets even harder because if your paycheck isn't keeping up with the rate of inflation, if you're not making, whatever 3-4%, whatever the inflation rate is, you're not making that much, then you're working just as hard
Mhm.
just to give up and get taxed more than everybody else. So
Right.
after I retired from the military, I was like, never, I will never be a W-2 worker. I know the game now. I know it's about owning a business, taking advantage of the
That
of the
gets
tax
it.
tax codes. This is all free stuff that's out there for everybody if they really want to learn it. But my last question: what's your opinion or the best piece of advice, like I said, that you can give for people wanting to borrow against their own assets, which is
Yes.
also another way to you kind of your own bank at that point. If you can borrow against your assets, you don't have to worry about a lot of the other negatives that come along with that. So, what's your opinion on that?
My opinion is absolutely go for it because so long as the borrowing is for an additional asset, I say give it a go because asset when you're obtaining more assets, that generates more income. So if you're borrowing money to acquire things that are depreciating or that will not be new income sources, absolutely not. But if you are going to be borrowing money, which in my opinion and strategies show that that would be deemed as good debt, if the purpose of you borrowing money is to acquire an asset, more times than not, that is the way to go. So I'm all for that. You have insurance policies, depending upon how much assets you're working with that will allow you to be able to become your own bank. You have products such as home equity lines of credit because there's different home equity lines of credit, home equity loans, in which
Like a
you
HELOC?
can have. Yes, which you can have on your property that just think of it like a giant credit card because you have a sizable balance, which is equivalent to the amount of equity that you have in your home. that's associated to your home. So I've even established home equity lines for my clients on their homes that they may not necessarily use at the time that we get them the product, but it's at least it's sitting there waiting for them to utilize it if an emergency were to ever come. Say you have a hot water heater that goes out. If you have that home equity line of credit readily available, you don't pay anything on it until you utilize it. And so that's a product that homeowners may want to think about too. So in the case of an emergency, you have, money that's readily available that you already have been approved for. That in the case of an emergency, you can use it for, whatever the case may be. When you do the application, you can say it's for home improvements, but essentially once you're approved for it, you can use it for whatever you want to. I've had clients that have gotten it, said it was for home improvements at the time of application, but 6 months down the line, they just paid off the remaining balance on their car. So once it's yours, you're at liberty to use it however you wish to. But I'm a fan of getting into debt to buy more assets because the intent is to have the asset become an income source. I'm for that.
100%. Thank you so much for breaking that down and answering that. And
Yeah.
again, taking notes once again, ma'am. So, Dr. J. McNeil, thank you again for coming on the show. I'll stop. I'll send it back to Corey.
Oh man, this is great. Jay, you enjoying yourself on Black Men Sunday, sister?
Always. There's never not a time where I'm not having a ball.
Yeah, because when I was checking my Instagram, you hit me up. I was like, "Yeah, you can come back on whenever you can come back on every quarter." Because I mean, you see how the conversation is gonna flow. And one
Yeah.
thing that I love about Black Men Sundays is I wouldn't know you without knowing Allie
Abby
Braswell, who
Braswell, yeah.
African American Chamber of Commerce. So, whatever state we're in, let's make sure we're getting in these chambers of commerce, African
True.
American, the regular chambers of commerce. And I wouldn't know Allie Braswell Jr. without knowing my sister Crystal Brown. So,
Yeah.
yeah, so
Yeah.
TV life, the thing about it
Uh-huh.
is, we do what I call with Black Men Sundays, it's a spiderweb effect. And, I definitely want to appreciate you and thank you for, giving a donation for the Boys and Girls Clubs of Central Florida as well, because, we're in our turkey drive mode. So before I let you get out of here, though, Dr. J, I got to hit you real
Yes.
quick before we get out of here real quick. So, I mean, people that want to connect with you, how can we link up? Well, I know how I can link up, but how can people link up, connect with you if they want to, get on with Maven on Solutions? How can they get on?
Yeah, so my social handle on Instagram is JEI_speaks. That's JEI_SPEAKS. And you can see here's my QR code. If you all are able to see that, you can scan that. I'm also on, as you can see at the top of the banner there, on Instagram as well as LinkedIn and YouTube. My YouTube handle is at JEI_speaks as well. So it's the same handle. Uh, the one on YouTube is the at JEI_speaks. So if you just walk you through my Instagram, if you go to my Instagram page, again, JEI_speaks, there'll be 5 different links there. One of them is if you want to know more about mortgage services, real estate services. There's a link for my book because it's sold, Growthsome. It's sold on Amazon as well as Barnes and Noble online platforms. And then if you ever want to book a coaching session with me, I'm listed in the medical directory for psychologytoday.com. There's a direct link in the links of my bio on Instagram. So I feel like that's the easiest way to find out all the things that I do is just to visit Instagram and check my bio for all the links there.
So let's talk about you though. Before I let you get out of here, what's next? I mean, I feel like you're killing the game on all frontiers. What's next for you now?
Yeah, so what's next for me is just I'm focused on Maven Leadership Solutions into a national leadership training and consulting platform. But specifically, I'm focusing on working with investors, not only just here in Florida, but international real estate. There's been some developmental projects that I have been in talks with in the Caribbean. And so I'm just looking for all of that to unfold and occupying those spaces.
All right. And for the brothers and sisters listening that says, I'm interested in taking my career to a maven
Yeah.
spiritual level, where should people start where they're like, okay, I'm just really starting my journey. I'm not quite
Mhm.
sure I'm ready for J yet, Dr.
Yeah.
J yet, but like where should people start where they want clarity, purpose, and leadership?
I feel like people should start with their home base. Like, you know, I don't think you should take advice from people. I heard Pastor Ron Carpenter say, take advice from people that you know that love you. And so, because, social media, I think it has far too much influence than it should. And so, if you are to center yourself around people that you know that love you and that are invested in you, um, just to be able to be in the company of that love and being centered and getting guidance and direction, not that that should be the only thing that speaks to you, but it should be a place that you find in which you're able to be centered and just start with a prayer life and asking God to be a part of your plans. As we know that the scripture says that when we ask him to be a part of our plans, it's then that he will begin to direct our path. And so I think a lot of times we just venture out there on our own because we have the skill set, we have the talent, we have the contacts, but we totally have missed one most important step, and that's to ask Him to be a part of our plans. And because God's not on the line to bless anything that He's not asked to be a part of. And so, if we want His wisdom, His direction, His guidance, and most importantly, His covering, we got to ask Him to be a part of our plans.
Wow. And we're talking about growth zone. We're talking about Maven Leadership Solutions. Yeah. So let's talk about your legacy. This is my last question because I really could have wrapped it up right there. But what legacy you trying to leave? Like, what's that dash you gonna leave? Before you get out of here.
I want to leave a legacy that I've empowered men and women to be able to lead themselves into a chapter of their lives where they are embodying their own ability to never shrink, to never compromise, to walk into rooms and take up space and operate in the fullness of their gifts and their calling and be unapologetic about it.
Well, that's what we're talking about. This Black Men Sundays. I'm your host, Corey Sylvester Murray. We had Jennifer J. McNeil. Dr. J came through back again. So I appreciate you. I appreciate your time. Thanks for coming on Black Men Sundays, sister.
Thank you for having me, Corey. It's a
For
blessing.
sure.
It's a black man Sunday. Time to put all childish things away.